What's going on, everyone? This is gonna be the trade recap for Monday morning. So, started off, I came into the charts just looking to see what had happened during the overnight session. So for that, I just go on the 15 minute, turn this indicator on, and then I see that it rallied up during Asia, failed to take Asia highs, and then London session it just went down, and then it left all this liquidity up here. But coming into the day, what I was looking at was retracement to the upside, right? Because we had dumped a lot since last week. So I honestly didn't really think it wanted to keep going lower, especially after this recovery right here. So I was looking for longs coming into this morning. And as you can see, at 8, we get this big sell-off, right? And if you go on the 50 minute, you can see that we formed a nice 15-minute fair value gap right here. That we completely respected. So after me seeing that, we respected this on the 50 minutes. So 2 minute doesn't matter that we broke because this is all in higher time frame. I was looking for longs coming out of the 15-minute fair value gap, especially because we had swept all of this and we had way too much liquidity above to not target that. So here I was waiting for my textbook V-shape longs, which we got the most textbook inverse fair value gap long you could ask for. So as you can see right here, it forms a fair value gap. And what does it mean when price disrespects it, right? Instead of tapping into it like it's been going on the way down. Because as you can see, when this downtrend started, it formed one here and it tapped into it to fill orders, kept going back down, right? Formed another one here, smaller one, got orders, went down. Another one right here, right? Got orders, went down. And that just tells you that, like, as of that moment, it was bearish, right? Because it was respecting the bearish fair value gaps. But the moment you could see it broke, right? It was like, okay, like the market no longer needs to retrace into fair value gaps to fill more orders to go down. Now it's just gonna not give a fuck about it and break it. And that's what I saw here. So I entered as soon as the candle closed, right? I'll delete this one. It closed above the 1 minute fair value gap. So I enter here, stops below this fair value gap, right? Because the reason I put my stop here is, well, you could have put it here or here. Mine was here, but if I would have seen that the market came down, right? If I would have seen this, where it came down and it closed below this, that's a bearish indication. So I would have exited my position, right? Max, I would have lost this here, but if it closed below this, then I would have exited early. And the reason is because, like, this could be bullish, but it could maybe go down and want to fill orders in that fair value gap and then come up, right? So that's why I want to put it below that, because just in case it wants to come down and fill orders. In this case, it didn't do that. It just instantly shot up. And I had my break-even point after this internal high right here. After this internal high, set my stop loss to 0 so I can no longer lose. And then I did take partials along the way. and I had my final take profit at these equal highs right here. As you can see, it all gets stopped out at the same. I could draw a line and you guys can see. Boom. Right, has the same touch on the same line. So that's obviously a point of liquidity. And as you can see, um, this was actually a great take profit because it only went up a little bit more. It only went up 10 more points before it started coming down, and it would have stopped me out at break even, right? It would have stopped out my final contracts. And then after that, as you could see, at the end of the day, we end up rallying up. But after I caught this trade, right, this was such a textbook A plus trade. Like this is exactly what I teach. That I was fine with this, right? Like I didn't need any more setups for the day. I already found my A plus for the day. This was it. I'm not gonna get greedy and keep trading. Like I was done. So I took this trade, um, made 690 profit, and decided to call it a day and just went on a run and yeah. But this is how it should be when you guys trade, right? You risk whatever your risk parameters are, whether that's 1% in your account, and then you just take one trade is all you need, right? And here, like I did get lucky that um, like it went down afterwards, like my take profit was so on point. But most of the time, you don't need this entire move. Like I took profits along the way. It's not like I held all the way up here, and if it didn't hit this, then I would have gotten break even. That's stupid. No, I took take profits at this internal high, and then I take profits here because you don't need the whole move, right? Like this is like an abnormal risk to reward for me, right? Like more than a 2.5 is a lot. So that's where you want to start looking at to take profits in. But overall, this was a really good trade. Glad I got done really early in the morning. As you can see, I was done with this trade by 9. So that's literally all it is for me. Like no more trading for the rest of the day. No more looking at charts. That's basically it. And yeah, so I mean, once you get good at spotting these and you just take them, then trading just gets so easy because it's like step system you have to follow. You follow it, and that's it. It's like it's really not that hard. But hopefully you guys enjoy this trade recap. Um, and yeah, I'll see you guys tomorrow.